What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. Today, we are going to answer the question, do you have to pay back a loan against your that you take against your whole life insurance policy, right? It's an important question because when you don't pay your policy loan back, depending on how much cash value you've borrowed against and how old you are, just the overall, every situation a little bit different, but it can really put your policy at risk of lapsing if you don't pay the policy loan back. So the technical answer to this question is no, you don't technically have to pay back the policy loan. And the reason for that is because the death benefit will cover the loan balance when you pass away. That's assuming, though, that you don't over leverage the policy and you don't do it too early in the policy. You want to give your policy enough time to grow if you're going to do that. That's why really the only scenario where I believe it's acceptable and appropriate to not pay a policy loan back is when you're older, you have funded the policy correctly, you're getting good compound growth, it's had time to build up that cash value, and you're going to use it for tax-free retirement income. So income in retirement. That would be a scenario where as long as you're not taking out too much income, then you should be okay not paying back the policy loan, because the death benefit, basically what happens when you pass away is they will deduct whatever your loan balance is from the death benefit to pay that off. And then whatever's left over gets passed on to your beneficiaries income tax free. And that's fine. That's a really good scenario. Just want to make sure that you're working with your agent. You map out a couple of illustrations and you have a plan for how much income makes sense based on how you are funding your policy. Okay. Because you don't want to over leverage your policy. The problem with not paying a loan back, a policy loan, and this is in when you're taking tax-free retirement income too. That's why you want to be careful not to take out too much income, is the interest compounds against you. Okay. So when you don't pay your policy loan, that interest, it's going to compound against you. We don't want compound interest working against us. We want it working for us. So one of the great benefits we get from these policies is our cash value is always going to get that compound growth. That's great. So but when we pay our policy loan back, we're only paying simple interest at that point. If we don't, it's compounding against us every single year. So if you take a policy loan for $10,000, your interest rate is 5%. Next year, your balance is $10,500. Now the 5% is being applied to that $10,500, and so on and so forth. So you really don't want to let that get away from you. At the very minimum, you want to cover the interest cost every single year so that it doesn't compound against you. That would be like the bare minimum. But here's the real thing that we want to think about, guys, is should we pay the policy back? Like that's really the question that I want you to ask yourself. Because when you start thinking about the benefits that we get from these policies, and also I'm going to go through a couple of points right now why it makes sense to it makes sense to pay the loan back. You want to actually do that. So that question, should you pay it back? It's an absolute yes, especially if you're using your policy to implement the infinite banking concept. So I got a couple of bullet points here. We already covered the difference between simple interest and compound interest. We definitely don't want a loan compounding against us that can put our policy at risk of lapsing. Now we don't have this amazing policy. We don't have our life insurance coverage. Not to mention we could have potentially a massive tax bill if the policy does lapse. So you have to be really careful with that. But here's a couple of other reasons why you do want to pay the loan back. Again, especially if you are implementing the infinite banking concept, is because every time we make a payment, it restores our cash value dollar for dollar immediately, minus interest costs, of course. But we're basically putting that money back into our bank that we can now reuse for another opportunity, or if an emergency comes up or whatnot. When you take out a bank loan, a loan from a traditional bank, are you able to do that? No. Every payment you make to the bank, it just goes to the bank, principal, interest, and all. You don't have access to that anymore unless you have a revolving line of credit and stuff like that. We're not talking about that, though. All right, but you would not pay a bank loan back, right? So why would you not pay your own bank back? Because that's what we're doing with these policies, guys, is we're basically creating our own banking system. So if you would pay back a traditional bank, why would you not pay your own bank back? Your bank is even more important than traditional banks, right? So we want to make sure that we're paying that back, and because it restores our cash value so we can use that money again for future opportunities and potential emergencies, et cetera. Okay. Another, just again, different way to think about this, kind of like a side benefit that I like of paying these policy loans back is we're actually contributing to the profitability of our life insurance company. And I say our life insurance company because when we set these up with these mutually owned participating life insurance companies, we are part owners in that company. So the interest that we pay, it's a very small price to pay to have control of our capital the way that we do with these policies and implementing the infinite banking concept. But we contribute to the profitability of the company, which then comes back to us in dividends. Now, I want to be clear that they're not technically sending back our interest or anything like that. You're not paying yourself interest when you pay back a policy loan, guys. That interest goes to the life insurance company. But that is a small profit center for the company, which then comes back to us in dividends. So just a little, again, a big part of the infinite banking concept and the way we use these policies, and actually I should say the way we think about these policies is really, really important. All right. So I think that's all I got for my bullet points on why you would want to pay this back. But I do also want to mention, like, how do we pay these policy loans back? Like, in what I'm saying, the point I'm trying to make is, like, when you take out a loan with the bank, there is a payment schedule, right? Well, you want to do the same exact thing. Anytime you take a policy loan from your whole life insurance policy, you want to have a payment schedule. And you can use there's a bunch of free amortization calculators out there that you can use. That's what I use. I think it's from bankrate.com. Either way, there's plenty of them out there. You can just Google them. And then you plug in the numbers just like a bank would, where, okay, so we take our balance, let's put an interest rate on it. So you want to do at least your policy loan rate. But for example, my policy loan rate right now is 5.5%, but I set my amortization and just my repayment schedule back at 10% so that I pay back the loan even faster. All right. Now, you don't have to do that. Again, one of the great benefits of taking policy loans to take advantage of opportunities, emergencies come up, whatever, is that we have flexibility. We are in control of how the loan gets paid back. It's not a structured loan like a bank loan is. Like, you can't go more than 30 days without paying back, like making a payment on your loan without starting to cause some serious problems in your life, right? With a policy loan, that is not the case. If 1 month, cash flow is a little tight, you could skip that month and then catch up next month, and there's no consequences to it. Nobody's going to call you. Nobody's going to harass you or anything like that. You just want to be diligent, make sure that you get back on track so that, again, that interest is not compounding against you, and we're restoring cash value as quickly as possible. So what I do is I set, I usually do like a 10 to 12% repayment. Like that's what I set my interest rate at for my repayment schedule. And that's exactly what you guys want to do. At the very minimum is use some type of amortization calculator, schedule, whatever, to stay on track for when your policy loan gets paid back. Okay. And, anytime maybe, you come into a windfall of cash or whatever, you could dump that right back into the policy, and it restores that cash value. Like, there's no prepayment penalties or anything like that. But at the end of the day, guys, the real question is not whether or not do I have to, unless you're using it, you're in retirement, you're older, the policy is maturing or has had time to mature and build, and you're going to use it for tax-free retirement income, then that's okay. We don't really need to worry about that too much, as long as you don't over leverage it. But if we're doing infinite banking, the real question is, should I pay it back? And the answer is always 99% of the time, absolutely. Otherwise, you run the risk of the policy lapsing, right? So I hope that was helpful, guys. Hope that gave you some really good information about policy loans, utilizing policy loans, how to pay them back, etc. Just making sure that we're being, what one of my mentors said a while back is we're being responsible bankers, right? Because again, we are setting up our own banking system with these policies. So we want to take that very seriously, just like we would take any loan that we take out for, whether it's a mortgage, car loan, whatever, we take that seriously, and we take our, things like our credit serious and whatnot. And we want to make sure that we're always paying that back, just like we would a traditional bank loan, because even like we get so many more benefits with our policy and taking these policy loans than just going through traditional bank. I'm going to do a separate video on the differences between the two. But for now, I'll go ahead and wrap up with that. Definitely want to pay your policy loan back, guys. Do you have to? No, but you want to. Trust me. All right. So if you guys have any questions, drop some comments down below. Also, I'd love to hear your feedback. What do you think about, I don't know, what do you think about policy loans? Do you think you should pay them back? I do. I think it's really important. But anyways, I hope you guys are crushing it. Hope you're doing well. And I will talk to you in the next one. To your success, Matty Ice is out.